Welcome back, traders. My name is Manuel Fonseca. Welcome to Smart Habits. In today's video, we're going to see examples of how to identify an order block and imbalances. If you have missed the video in which I explain this concept of order blocks and imbalances, I kindly suggest you to watch it, which is in the first comment here below. Now we're going to see different examples, how it works, and also what are the different things you have to bear in mind. You identify a proper order block or an imbalance. All right, let's go to the market. Great. So we're gonna start analyzing today imbalances and order blocks in a bullish trend. Okay. In the previous video, we have analyzed the same concepts of imbalances and order blocks, but in a bearish trend. Now we're gonna do the same exercise, but in a bullish trend. Okay. So I got as an example the BTC USD. All right. And the idea is just we're gonna bear in mind these definitions. We're gonna just talk to them briefly, because if you want to see the full description on this and the full definition of these concepts, I'm gonna put the video right here so you can watch it, the full theory, and then see the examples in bearish trend and then in a bullish trend, which is today's video. Okay. So just to remind you, the order block, remember that this is the last bullish or bearish candle before a strong market move that break the structure, right? You already know the concept of range beginning. And when we have a range beginning, we have this, which is liquidity taken, and we have something that is called the swing high. Like from the swing high, the liquidity is taken here. And then we have the next, which is the break of structure, boss, with a body of the candle. So this is the same definition or the same definition that we have to bear in mind to spot a proper order block, right? So it says that is the last bullish or bearish candle before the strong market move that breaks the structure. So after this break of structure, it means this bearish candle, red candle, will become our order block, correct? Here it is. I put it in blue because blue for me represents the demand zones, which means bullish impulses, right? So after this, remember that these areas or these zones act as a high probability areas of interest where the price often returns to mitigate pending orders before continuing with the market trend. So since this is the end of a bullish, since this is the beginning of a bullish range, what the market did after this break of structure was it keep pushing up, and then with this huge candle, it mitigates the orders, or the people who were selling here mitigate pending orders right here, and then the price follows the main trend, in which in this case was bullish, right? So you keep pushing up, and now we've in this stage, which we're actually in this scenario we're watching in this moment, we can recognize that there is also a range ending, which means that the price has done another liquidity taking right here, then it left a swing low, then after that break the structure with a body of the candle, we made a boss, and now we have a beginning of a range, the beginning and the end of a range. Okay, and now what we have to do here is we have to spot the order blocks and imbalances to understand the correct market moves, right? Or why the market moves in certain ways, correct? So far from here, we have this first order block, which is already mitigated, but I'm gonna put it here and we call it as an extreme, or the origin, and also it's called the move creator, right? It creates the movement uptrend right here in this example, correct? Also, it was retested because it entered here and then it re-entered here. It was retested here and then it keep pushing up. Now we're gonna try to analyze if there is any type of imbalance, but so far there is no imbalance as a bullish example. Now, what are we gonna do now? What should we have to wait here? Well, there is two possibilities. In lower time frame, for example, we are in a 4-hour time frame, correct? If you see this, if you can analyze these candle wicks right here, these candle wicks, they are created in 4-hour time frames. They look just like a simple candle wick, but in lower time frame, let's imagine in 1-hour time frame, these same candle wicks can be spot like one bearish candle and then a bullish candle that had like a retracement. So one bearish candle and then bullish candle, and that is an order block. So let's try to find out if there is actually what happened here in the market. Let me check 1 hour. Yes, it was. So if you can see here, we just went down one time frame, and we could find that here we find an order block in 1 hour. 1 hour order block right here. Since we're in a bullish trend, we may expect the price enter to this area, mitigate this zone, and then keep pushing up, right? But we're gonna go back to the first to the main trend line, this case 4 hours, okay? And we can see that that's why the price entered here, retested the fair value, which means the 50% of the order block, and then it keep pushing up, right? And let's see what will happen after this. So yep, that's right. Now we can see the next. We're just following the price, correct? And now look this end of a range. Remember that it was an end of a range? Well, but now we have here a boss, a break of the structure, which means that the trend will keep bullish, correct? So we have to keep updating this information. So this week high become an actual boss. Yes, break of structure. This boss here becomes a liquidity taken or a liquidity sweep. And this is the most interesting thing. Since we are in a bullish range, this is strong low, we have to update it. So this is the closest strong low we have. Why? We will determine this as our new strong low. Why? Because it's simple, because the previous week high that was here was broken with the body of the candle, correct? And since we are in a bullish trend, we just have to keep updating that information. And now we have a new range beginning, correct? Now we have to apply the same theory and the same way of thought that we did with this first order block right here, or range beginning right here. That is, let's try to spot or order block. Now, in some of the videos I explained to you before, I said that some of the order blocks could be the last bearish candle, or sometimes we can also take into consideration the bullish candle. Then in this case, I think it will be the most suitable thing because it looks much more clearer, right? Now let's see what happened after this. All right, so the price retested the area, or tested the area just slightly for a few pips. I think it did not touch it or mitigate properly the order block. Let's see in future, oh yeah, in future candles it does that movement. Let me check. All right, so look, now the price entered here, right? Re-entered in this area, which is fine, perfect. What we're gonna expect, of course, is a bullish movement, right? And remember that this high will become our week high. Perfect. This is the week high. So what we're gonna wait here is just for the price to keep pushing up. Keep pushing up in order to follow the impulse, this impulse, because this is a big impulse, retracement, and a second impulse. So let's see what happens if this actually happens in the market, because sometimes when you have the market like this, the price may go down, take the liquidity of other areas, other order blocks, and keep pushing up. Just simply do not continue with the bullish trend, okay? And we just need to be aware of it. So let's see what happened after this. All right, so we had a nice reaction. Perfect, we're good. All right, so far until this moment, we would say that the order block worked perfectly. So the price entered to the order block, and now it had the reaction, right? Now, I said in this video we will see opportunities or examples of order blocks and imbalances, but so far we just have seen order blocks. Now it's a great time to see an imbalance that I just spotted in this moment, right? And is to explain the next. You see this order block is right here, correct? This order block was created after the price mitigate this order block, this previous order block, and push it, and you keep pushing up. And then we have a break of structure of this high. Once this high is break with this candle wick, or candle body, sorry, body of the candle, sorry, then we will have this as a confirmation, as an order block, right? So this will become an order block. And I said to you in some of the videos, of the previous videos, that order blocks and imbalances are actually very near, one from each other, right? And now let's read the definition of an imbalance. So an imbalance is a strong displacement in one direction, leaving little or no trading activity between wicks of the consecutive candles. So if you see here clearly, we have 3 consecutive candles in a bullish movement, right? Then we have a huge displacement with this Greek candle, and this do not leave any trading activity downwards. In bearish, yes, in a bearish trend or downtrend. So it leaves this gap, right? This gap will become our imbalance area, right? And the imbalance has like a very similar reaction as the order blocks. They become non-mitigated areas that are uneven or creates an uneven distribution between buy and selling orders, right? So most of the times the price returns to these areas or these gaps to fill them, mitigate them, or balance them, okay, before it resumes its bullish movement, as in this example, because of course it also works in a bearish scenarios, right? So now that we're seeing the price in this example, we will expect, right, that the price may do the next. Assuming that we are still in a bullish trend, right? Why do I say assuming? Because, well, we have here the impulse, no? Range beginning, we don't have range ending so far, but this is the week high. So we assume that the price may go down, right? Probably take this imbalance or this order block area and keep pushing up, right? Now, another probability or possibility is that the price simply, because probably it is reacting in a really, I don't know, maybe in a weekly order block, or I don't know, on a daily order block or imbalance. So the price may keep pushing down, take the liquidity of these lows and keep pushing down, right? It's a possibility. So we need to be open, because our strategy just help us to predict where possible movements of the price will occur, but not how exactly the market will move, right? So let's see what really happens. And let's see, now you already spot the example of an imbalance and an order block. I think we have seen both cases scenarios. All right, so in this case, the price did not enter neither in our imbalance, neither in an order block. But then you'll say, okay, why then the price reacted in this area? Well, I don't know if you can see, but here is another order block right here. And this was the one who made the price keep pushing up, okay, in this example. Perfect. Now, the question is, what do we have to do now? Should we have to update or strong low again? The answer is, of course we have to do it, right? So we can work with a better frame or more clearer frame, right? So this break of structure, this weak high becomes a break of structure, boss, right? But now you will ask me, hey, but in the previous example, we had a very clear range ending where it was the liquidity sweep and a break of structure. But in this case, it was just a simply weak high. So a simply high that was broken. Now, do we have to do, can we update the strong low? Well, in this case, it wouldn't be possible. Why? Since we don't have a range ending, like in the previous example, right? And this is a simple high. We just have to keep working with the one we got here. So we cannot say like this, oh, this is our new strong low, this one. Mm-mm. It cannot be like that because we don't have the range ending. And it means that if we don't have it, we cannot update it, the strong low as simple as that. We need certain confirmations that are the ones you already know, correct? All right, so let's keep pushing forward the examples of this order block. But the nice thing, or for what it is used, this pause, is to this will help us spot new order blocks or new areas where the price may react, right? So look at the next. After we have this break of structure, right, we can find here decisional order blocks because we have extreme, which are the move creators, right? Like in this example. But we then have these ones that are called decisionals, in which we will wait for the price to get there and we made a decision. And it's the same we're going to try to find here. So after a break of a structure, we will look for a very clear and evident bearish movement or against or bullish because we're in an uptrend, we will look for bearish movement, very evident, and that will be our decisional order block, right? Why it will be like that? Because once we see this, is because we see that some sellers put pressure in the market, create this order block, right? That further we will consider as a point of interest to execute certain orders, right? Now, if we update the bar or chart until this moment, we can see that we have two opportunities to execute orders. So the first point of interest will be this decisional. We will wait here for a confirmation, or we can execute orders right here in this imbalance or in this order block. I really prefer to wait for a confirmation as well, right? So we have two set of opportunities. It's not like, and this is the difference of being a professional trader, or at least someone who knows who analyze the market, and someone who just trade as a gambling thing, right? Because some people can see this green candle expecting to buy, and people start buying here, right? Without confirmations, without trading plan, right? And that will diminish their probability of executing or having good results. But now let's see if these order blocks are respected. Let's see. Oh my gosh, so it keep pushing up. Great. So far we just have to wait. Some people will say, ah, what you didn't take any order right here or here, to keep working with the market. Because some people say after any break of a structure, you will find order blocks. This is something I explain in some of my videos, right? In the theory video, for example. And yes, there are a lot of indicators, let's say, that you can use in TradingView to spot order blocks, and it will fill your chart with full of order blocks. But that will actually diminish or the quality of your analysis because you don't know what are the most reliable order blocks in the market, right? So far here, from my point of view, right, after my back testing, the order blocks that were the best are the ones who are in the extreme and the decisional. The order blocks that appears up in the market, I wouldn't take them into consideration because they are likely to be there to trap other traders. Okay, I use another tool, but it will be matter of another video to explain to you what is that tool. Yes. So imagine that you just execute an order in this order block. Here. So the price always have a reaction. It always will have a reaction in order blocks, because that's why they were made for, to have a reaction. So for example, here it entered with this candle wick, and you'll say, wow, it's keep pushing bullish, right? But look, then the price takes the liquidity of this order block, which makes it invalid order block, right? And why that happened? Because people just I mean, why is there any type of invalid order blocks? Because some order blocks are made to make you get confused, right? And the from my point of view, the order blocks that work the best are the ones you can spot by yourself, right? As those ones that we just have analyzed. Okay. All right, guys. So in this scenario in which we have potential, this is not at end of a range yet, because we have here a liquidity. Here is a liquidity sweep right here, liquidity sweep, and here it is. Is there a break of structure here to confirm a liquidity taken? No yet. So this is a potential range ending, right? So there's no bust yet, no bust, no bust, right? So what I want to do here is like just try to find here order blocks and imbalances in which there are possibilities of reaction. So we already got this decisional order block, which is right here, and we also have this extreme order block that is here, combined with this imbalance. But I don't know if you can see the imbalance here in this impulse. We can see another imbalance. Can you see the imbalance? 2 seconds to see it. One, here it is. Here is the imbalance, right? Imbalance, remember, that is mostly when there is a huge displacement. That was the word I was looking for. A huge displacement, right, of orders. In this case, it was a bullish orders, and then there wasn't any selling order, and it left this gap, and this will become a imbalance. And then you'll say, hey Manuel, but I look another imbalance. Look, here is another imbalance right here. Can you see it? Yes, it is. So in the market, you will find plenty of imbalances, order blocks, and point of interest. Then you'll say, wow, it will confuse me much more than I was expecting. The thing here is, my friend, that you need to understand two things. First, what is your real point of interest? It could be this one, this one, this one, or this one. But point of interest are also a really helpful tool, because it will limit the amount of trades you will execute in the market, because you won't start buying orders here. No, you will wait and you will buy here and here, or maybe here, right? Or even here. But then you'll say, Manuel, but what is the correct one? There is no correct one. You just need to be in the market in the correct moment, wait for the current pattern confirmation in one of these, and then you will be able to execute orders properly, right? And even with that, it may fail, because trading is not of perfection. It's just the strategy, put it into practice, and then see if this strategy actually works and is profitable in a period of time, right? But you as a professional trader need to be aware that you are the strategy as well. It's not smart money or Elliott wave or indicators or MAI, RSI. It's not about that. It's about you as a trader. So if you know when to execute orders and you execute them where it should be executed, it means you becoming more and more professional on this job, right? Otherwise, you're just learning because it's learning, but learning without a proper system or clarity. Okay, you're just probably executing orders, feeling emotion, and it will affect you. So, as the sake of an example, let's put this order block here. Assume someone just buy here. They will see this movement. They will be happy for a while. The price may have a reaction, as you can see here, and what you will see. Okay, Manuel. In this case, the market did what the person was expecting. Like he entered in this order block because he was a no boss. And sometimes the market does that. It doesn't mean that it's not rewarding us to following or trading plan. No, it's simply that the price is just doing what it needs to do, which is move. As simple as that, right? If it doesn't accomplish what we're expecting, is we don't have to take this personal. It's just how the price moves, right? And fortunately for the person who put the order here without following this strategy, got a result, which I will feel, let's say, happy for him or for her, right? If he or she has a very clear strategy of why he or she put an order here, that's awesome for him, her, right? For us, it wouldn't be a possible opportunity to execute an order, so that's why I didn't consider that even as an opportunity. Simple. All right, guys. So let's see the final example, and with that, we're gonna finish the video, right? So updating the week high. We're gonna update this week high right here, and then we're just gonna take into consideration this liquidity sweep right here, and then we're gonna see here also a break of structure with a body of a candle, which is here. Perfect. Now we're gonna wait if the price makes the range ending. It did it. It did a range ending right here. Perfect. Pause. And now that we have our complete scenario right here, yes, our goal is to see where the possibilities of opportunities were made. So, for example, this first imbalance was mitigated. The price did not have any reaction. It's all right. But look in the second imbalance. The price entered here and is likely to have a reaction. So probably here, the price keep pushing up, and apparently is what it's doing now, right? That's it. So look, it reacted in our decisional order block, right? So, for example, the person who buy here without a trading plan would think the same of buying, for example, here or here or here. And that person will have multiple losses in a row, which will affect greatly his or her psychology, right? Meanwhile, if you just wait for the price to get to the decisional entry point or your extreme entry point, that's much more professional than just showing results of some orders in social media, for example, right? And you just have to stick to it. All right, guys. So we have already seen some examples of imbalances and order blocks, and also some reflections about the trading plan. So my piece of advice for you is to do the next. In the comments boxes that is here in this YouTube video, my piece of advice is to look for multiple examples, analyze bullish trends as we did, trying to find the order blocks and understand the reactions of the market. Understand that, for example, it reacting in an order block here as well, and here is reacting to an imbalance. And I want you to see this. So you can put your examples here, and we can start creating a community for feedback and so on, right? So my piece of advice, made at least 10 to 20 examples of imbalances and order block. Teach your mind to the difficult things like this, okay? And this is it for today's video, right? Post it if this video like you, write it there in the comments. share it with some friends, and don't forget to follow me in my other social media, TikTok, Instagram, or Facebook, right? So thank you so much for watching, guys. Subscribe to the channel and see you in another video. All right, see you then.